Yo, what's up, guys? So, I'm going to be filming just going over today and yesterday's trading. You know, we've reached all-time highs, so it takes a point on the market where you can't really trade confidently because there's no true liquidity to be taken. There needs to be engineered liquidity, which is what we are doing currently. So it's a little bit hard to trade the higher time frames, but like we're scalpers, so we're trading the opening range from 9:30 to like 11. So for us, we just have to focus on seeing like 15-minute, 1 hour highs and lows being taken out and swept. So these were the past couple of days. So we'll go over yesterday first because yesterday was I decided not to trade, but I took a trade during a London session. So it was right around like 11 o'clock. Yeah. So yeah, right here. So as you can see, we go down and we get an energetic move up, closing above this, taking out this internal high. And we get this fair value gap that's really clean. You can tell it's kind of manipulation. And then with this, price tapped back in, and this is where I went short. Short right here. Oh, bro, I'm lying. Hold up. Sorry. So I actually remember looking at this one, but it wasn't during kill zone hours. So I didn't take this one. I took this one instead. And I went under the commission. We took out this high. Um, there's like really equal highs here, so I shouldn't have actually done that. But there was SMT also between this one. So when price closed under and then tapped back in, I went short. So it was around the consequent encroachment of the inverse fair value gap. And I put my stop right above here because I felt like if we had all this resistance here and we already broke up, we took out this high, and we had an energetic move down. We don't need to fill this fair value gap as we're already filling this and this inverse. There's no reason to fill this fair value gap. So I entered here with I just did micros. Like this was a really small position and I targeted this volume imbalance. And then I had a runner down to like here. So that was a pretty good trade. Um, then going to the morning session, I didn't trade the morning session because, to be honest, I was like kind of lazy. I stayed up late on that night for London, and then I had practice, and I was tired and I wanted to sleep, so I didn't trade. And the markets weren't really that clean, but this was a really clean liquidity sweep that just like it just pops out to me really. Along with this, like you can tell this is just clean one fair value gap right here. Price inverses it. It doesn't come up back to it, so you wouldn't really get an entry unless you just longed or shorted there. And there was a couple other good inverses, but I didn't take a trade until I posted the trade actually on my YouTube. Let me go to it really quick just to check it because although this one was with this was just under. How do you get to your views? All right, here. This one, not. I don't think it was with micros. Oh wait, no, this is my London execution. I didn't get the morning execution. Sorry, I'm just confused. I thought I got the afternoon execution. Hold up. This is that. So this is. Oh yeah, this is the trade I took that I lost. So basically, price. This is what I lost 0.3% because this was during the last hour and price inverse to this. I think this was on the 3 minute time frame. This is at 12 o'clock. So oh yeah, we took out the lunch highs and then this is on the 3 minute. We closed above, tapped back into this order walk. I entered once I saw some resistance because I was basing it off these wicks. Look at all these wicks. But what I should have recognized is that price the whole day disrespecting these like fair value gaps. I mean, this is on the 3 minutes, so you don't get as much, but like here we disrespect. I mean, we're just disrespecting a lot of fair value gaps, and price was not as clean as you'd really want it to be. So I shouldn't have really taken this trade, especially after kill zone hours, because kill zone ends at 11. And I told myself I wouldn't take a trade because I didn't wake up, so I didn't deserve to take a trade. So there's that. And then going into today, there's ICT's live stream, and I was kind of just watching that. And this is this was last night. Something I was watching. This is a 15-minute fair value gap. And we had this smart money reversal here where we took out the low, took out this low, and then we started coming back up, took out this high right here, and then I predicted we would go down. This was the manipulation. There was a good inverse right, perfect inverse, might I say, right here. So as you can see, the reason why I said this one's perfect is due to the fact that the close. Oh, it is the close. Okay, but this one, like as you can tell with this one, we close under, and we still haven't gone too far away. So you could have gotten an entry like here, before price. Then you could have also entered on this one once price inversed, but then it closed back above. But yeah, that's a good entry from the top if you use the SMT, because if you use the SMT, you wouldn't need like the cleanest inverse fair value gap. Then going into market open, I saw this, and I actually thought to myself, like, okay, this will probably reject from here. And I was like, no, I was not thinking of taking a short, but I was like, I mean, it would work. And then there was this fair value gap right here that I was like, okay, if it inverses and it closes like right around here and we get like a little change in state of delivery, then I would enter. But you know, price didn't do that. It just dropped. And this is from here, you probably should have kind of gone off because you had more of a bullish bias going into the day, which in the end it played out. You had that bullish play, but it in the morning session was really bad this morning. And you know, I was on ICT's live stream and he got stopped out of 3 plays, and you know, it just goes to show that there's going to be hard decisions in the market, and like it's kind of complicated. So this was the opening fair value gap, opening range IFUG. We shot down, we got back up. There was this entry where I was gonna enter this one, but we never actually closed above. And sometimes you see these where we close right here and then we drop all the way back down, using it as a fair value gap, not an inverse fair value gap. So I was like, okay, if price closed here, and then we had a down close candle and an up close candle showing another change in state of delivery after we closed above this order block, that would have been a lot more enticing as an actual play. But no, and then price started ranging, and then here it tapped into the zero point 0.5 level, consequent encroachment of this small fair value gap, shot back up. Forgot the exact play I took, but I remember I took. Yeah. Okay, so there's this one. This was a good inverse fair value gap play. So price inversed here, short here. You know, short here, and then you target this. But the thing that was wrong with this that I had to point out is that yes, we inversed this after we closed here. We inversed, but on this candle, what you have to see is we already took out this high, which was the target for this. So therefore, it's a lot lower probability, and we could just come right back up. Because with the inverse model, you don't want the external high to be taken, external high of that range. So there's this one. This is a 3-minute fair value. The price was kind of ranging around. This is a really nice one, just in my opinion, because we came back down to this opening range IFUVG, which are very they're really they're a good like point that price might come back to. As you can see, we levitate around that area for a while. So there's this fair value gap where we inverse this, but for this one it would be kind of hard. You would kind of more use it just as like a fair value gap play, like not necessarily a higher time frame, but like a larger perspective on a lower time frame, where because we already took out this internal high. So, but when price comes back down to it and you see some rejection, you can also, that is a good play because you inverse this, then you're reacting. You're delivering from this fair value gap, this inverse fair value gap, and then you could enter. I was going to enter this one, but we already went up to this high, so we were delivering from this fair value gap before we closed above, marking the change. I mean, not the change in state of delivery, but this was a change in state of delivery because we have a down close candle here. So this up close candle after these candles in down, but we're in an uptrend, so not really. There's really just like a bunch of fucking nonsense bullshit going on here. There's too much. This was a good play, except we didn't really get back in. I took a long once price. I forgot, but yeah. And this was also a really good play that Dodgy took. So basically on this one, you'd have to see it, but like there's this fair value up, the price Yes, it did close above the consequent encroachment, but I think there was a higher time frame fair value gap as well. Actually, we didn't because we closed here and then it just spiked up there. But we wicked, go down and then we closed back above. Yes, we did not take out. See, we took out this high. Yes, so don't get confused. But we didn't take out this high, which is the external high of this range. This high would be part of this range, so you would not be able to take this inverse fair value gap because that one would have already been taken. So, and then the thing with this one, even though maybe you would get a poor entry or enter a little bit soon once like you see this candle and this comes down here, because we have these equal highs that are a high probability run like liquidity spot. But then you also have this just like low resistance liquidity hanging right there. So that's a really good by confluence to use. And then also, as you can see with the pink line in the bottom or in the middle, price is just completely ranging around the new week true open, and that just goes to show you that we're just consolidating around it. So I shouldn't have even been trading that session. Um, this is what I saw when I got out of practice, and I was like, okay, this is good. This is a pretty good trade actually. I didn't take it, but look right here. So you get this fair value gap, that price inverse, and the reason why I choose this one, not this one or this one, is because price came into this one. Yes, it wicked and delivered out of this one, but it was truly delivering from. I mean, you can use this one if you want. If that fucking makes you happy, use it. But this one also is a little bit lower, and price truly respected, and then comes back in. And I was thinking of longing, and then that just fucking made people eat. And you know, there's entries like this where price is like super close. Yeah, but going into tomorrow, literally just fucking no emotions or anything. I'm down 800 on the account. That's fine. I took just two losses today. And the thing with both of those losses is, yes, they were losses. I forgot to take screenshots of the trade, but in the moment, I asked myself, would you regret taking this trade? And I said, no, I would not regret it. So I took the trade, and after, I still don't regret it. I don't regret it because it taught me a lesson. It just taught me that there's no reason to be trading, to be taking trades during, like forcing trades, even though you're not necessarily forcing it, but you're going into the market wanting to take a trade during all-time highs, and there's nothing. It's not high probability, and high probability is what allows you to be a consistent, like efficient, proper full-time day trader. So yeah. So yeah, going into tomorrow, I don't know. We'll either look for fair value gap, like displacement above this high. If we're looking bearish, we might reject from this 2 to 2.5 standard deviations. We already closed a bunch of these, so yeah, we will have to see what price will do. But it's gonna be either we react to this or we inverse like this fair value gap and then we go down. But it's kind of hard to tell. All right, see you guys.